Hey guys, so I got an interesting question the other day, and I want to share that question with you guys and share what I see to be the answer to the question. Hopefully, it'll be helpful for some of you. So, the question was, how do you record the purchase of a flip with subject to financing? Okay, so I know probably most of you know what subject to is. For those of you who don't, that's a frequent term that's thrown around in the real estate investing space. It's kind of in the creative finance arena. Speaking to subject to, so I'm not a subject to expert, but the what I know about subject to is it's when a buyer takes over a seller's mortgage, so their existing mortgage. So let's say that you have a real estate investing client that you're serving, and they're going to purchase a property from a property owner, from a seller, and that seller has an existing mortgage on that property. Through that transaction, they're not going to pay that mortgage off. Our client isn't going to get a new mortgage. They're just going to take over that existing mortgage. And so typically in these situations, from what I've seen, the seller of the property, their name stays on the mortgage. It's just the ownership of the property transfers to, in this scenario, our real estate investor client. So I'm not going to get into the legality of that and how all the contracts work and how to do that safely. But it's something that us as real estate investors do, and us as bookkeepers who serve real estate investors, it's what our clients will do probably at some point in their investing journey, right? So it's good to be familiar with it. So again, the question is just, how do you record the purchase? When a property is purchased, this question was for a flip, but it doesn't matter. It's the same for a flip and a rental in this case. How do you record the subject to financing associated with it? And so the way we do it at Time Capital Bookkeeping is we have a conventional loans principal, account, a long-term liability account. And so typically when properties are purchased subject to the financing, usually that financing is a long-term liability. In 99 out of 100 cases, it's a conventional loan. And so that's why we do that. That's why we book it to our long-term liability conventional loans principal account. If you have clients who do a lot of these, maybe you want to set up a subject to loans principal account, as long as it's a long-term liability account. So you can skin that however you want to skin it, but there's nothing too complicated about it. It should be recorded, or it should be documented in the HUD statement or the ALTA statement or settlement statement, whatever your state calls the statement that details the transactions, the line items that are involved in purchasing or selling a property. So it should be detailed in there. If it's not, that's where you can get the current loan balance to be able to input into your conventional loans principal long-term liability account. If not, in this scenario, your client will need to get that documentation, get the loan statements, the most current loan statements as of their purchase from the seller. And the interesting thing about this situation is, the real estate investing client is going to maintain a relationship and maintain communication with the seller that they purchased the property from, because that mortgage is still in the seller's name, right? So sometimes, they will gain access to the portal, which is definitely recommended, and just pay those payments directly. Sometimes the seller will continue to pay the payments, and then they will be reimbursed, and then maybe even with some cash on top of the reimbursement from the real estate investor. So kind of just depends on the terms of the deal, and kind of depends on the real estate investor's flow and how they like to do things. But that is, from what I've seen, that's the best way to do it, just for the real estate investor to pay the loan directly. So it's directly coming out of their account, and it's not any sort of reimbursement, just to kind of cut out the middleman. But okay, so hopefully that clears that up. You're not doing anything different with, your journal entry for recording the rental property, or recording the flip, or recording, whatever asset that has been purchased in a subject to financing scenario. You're recording everything the way you would record it, and that subject to financing can just go to a conventional loans principal long-term liability account, or, whatever you want the title of the account to be, just as long as it's a long-term liability account, because that's most likely what the financing is. So a lot of this is detailed in our course. If you don't know how to record a flip or rental property HUD statement, all that's detailed in our course. If you need a great chart of accounts that is fully customized for real estate investing, serving real estate investing clients, that actually comes free as a bonus with the purchase of our course. or you can just, you know, go to the same site and purchase just our chart of accounts if you're just looking, you know, for a good customized chart of accounts to import into whatever accounting software that you're using. So awesome. I hope this is helpful, and I hope you guys have a great Friday and a great weekend.